Market opening. And Naren, stay with us. We would want you to react to the first rates as well this Monday morning. Let's see if it's a continuation of the trend that you saw on Saturday, or for that matter what the SGX Nifty is indicating, although that's a little faulty considering Saturday, remember, the Singapore Nifty was not trading. So it seems like finally after that big fall on Saturday, some stability and semblance is returning to the screen. We've started off absolutely flat. The Bank Nifty, which fell pretty hard on Saturday, is also seeing some flattish moves, so at least the fall gets arrested, and that I would say is a good sign after that kind of fall that you had on Saturday. I want to quickly check in on the sectoral indexes, and I can see that Infosys, TCS, all those beneficiaries from the DDT abolishment are actually holding up, but I want to see the banks because they were the ones which took it on the chin in Friday's session. So be it an SBI, which had a 5% fall, or for that matter even an HDFC Bank, which fell pretty hard, and ICICI Bank as well. Those slight red ticks on some of the banking names continue. While ICICI Bank recovers about 1%, HDFC Bank has started off with a red tick. Autos would also be reacting to their monthly sales data. Slight bit of recovery is what you've seen. At least that is what the month-on-month data seems to be indicating. So about a 0.5% uptick coming in from Maruti. I want to check in on Tata Motors, which of course lost a fair bit after its earnings as well were reported last week. Bajaj Auto sees a big rebound. Again, after its earnings, this one has seen a very smart follow-through in terms of gains. M&M as well starts off pretty flattish as we speak right now. What's happening in insurance stocks? Is the fall there after Saturday's budget impact getting arrested? HDFC Life, a 0.2% gain there, 563 thereabouts is where that is. SBI Life recovers about 2%, 911 on that stock. Nippon Life continues to suffer though. So not bad, I would say, Nikunj. At least you're starting off on a quiet, flat note. I don't know whether this is going to get worse towards the latter part of today's trading session, but at least the first start is a decent one.
Let's see when institutional investors, they step in, and frankly, you can always look at the most important theme for us is that we are still dependent on global flows. And globally, if at all for institutional investors, post what's come on DDT, I think they should be happy and excited. For them, it's like great news. Sovereign funds coming to India, again, great news. Now, we can talk about some HNI crowd feeling the heat of DDT because they'll have to pay 35 or 42% tax, but that's like 1,000 people, 1,500 people, less than 10,000. Those are opinion makers, I agree. But markets is beyond those 10, 15,000 people. I'm using very harsh words here to simplify something because on Twitter, that's what we are hearing in last 2 days. That's what, they've been calling me and saying, oh, you will have to pay more taxes. But remember, folks, markets are beyond 10,000, 15,000 people, beyond just 15, 20,000 promoters and how much tax they will have to pay.